Welcome to the Deal Champs Pod. I am your co-host, Stratton Brown, aka Strat Daddy. Today we have a very, very special guest on today. Can't wait to hear all of his insights. I think he sees more transactions than anybody, honestly, probably in the country.
That's not even an exaggeration. I don't even feel like that's an exaggeration at all. Wealth of knowledge today.
Wealth of knowledge to see like what's actually going on in the economy too, to see like, okay, what were people thinking and everything else? Because you see like line by line, week by week, and I bet you can see it day by day of what happens. I bet you if there's like bad news, you could probably see, hey, we didn't get as many contracts today.
Yeah,
but
there's definitely a daily pulse out there.
I love it. I'm excited to talk about it. Today, we're going to talk about Trump won the election. Now what? Again, my name's Stratton Brown. I'm your co-host. We scaled 2 different companies to 7 figures. We're doing our 7-figure wholesaling challenge right now. And my goal is just we go open up the books for everything. We all have programs where we can learn, but I show you every single mistake I've made so you don't have to go make it on your own. We have the master of hair, the hair out today, Mr. Jason Pritchard.
Hair's out, ready to go. I had to get dressed up for our special guest, David, here. It's your other co-host, guys, Jason Pritchard. Backstory on me is I worked in corporate America for 15 years. Hated my job, was unhappy with my life. We burned all the boats in 2014 and have not looked back since. We've done over 500 real estate deals in that time period. We have a rental portfolio of just north of 100 units, mainly here in Central California. And as we always say on this show, our goal is to try to transfer as many of the real world experiences that we've had to you guys so you can learn from our mistakes and get to where you want to go as fast as possible.
Oh, we got Captain America. He made
it.
Is the Obama Wi-Fi working? Is the Obama Wi-Fi working, bro?
Hey, we got the Trump internet out here. This thing is
I love it. The MAGA internet.
We got the fiber out here. It's strong.
Oh, you need that Starlink, bro. You need that Starlink, no fiber. That's Starlink. If you really loved America. Do you a quick intro. You're up.
I'll get it if it's available. So, guys, Dean Rogers, your other co-host. Excited to be here today. I started my career in the NFL, then transitioned to corporate, then into real estate. Been doing that for just over a decade now. Do all my deals in Central California. We just broke through 2 weeks ago on 700 deals that we've done. Have a rental portfolio. 8-figure rental portfolio, and coaching students how to get started with real estate with wholesaling. And you guys can always connect with me at deanrogers.com.
And we have the master of transactions, Mr. David Olds. The master of transactions is what we'll call you.
That's very generous to say. Yeah, my name is David Olds. I've been a real estate investor since 2002, full-time, since the end times of 2009 when the world kind of crashed. Came to an end, and I left my corporate job in retail and construction, building materials, and left Orlando, came to Chattanooga, Tennessee, with literally $5,000 in my pocket for me, my wife, my 2 boys, and 3 fat dogs. So we were half of broke. We didn't even have enough money to be considered broke. But yeah, we had to figure out wholesaling. Wholesaling was sort of the gateway for all of our other businesses. We went from wholesaling to rehabbing to buying rental properties. We have 67 rental properties now. And yeah, then we eventually opened up to be wholesaling nationwide, turned that into a 7-figure a year business. And then three years ago now, what are we in? 3 years ago, we opened Easy REI Closings and grew that to be the nation's largest transaction coordination company, serving investors and wholesalers all across the country. And then this year, we were super happy to operate and open alongside that Easy Title and Escrow, which is a title company. We're operating in 8 states right now, growing to another 10 next year, just serving investors and our clients. So, yeah.
I'm going to go really quick. I know we got a ton to talk about. We don't get many guests on this show that have been in business since 2002.
Yeah.
What has been some of the biggest changes that you've seen, David? I can't even imagine trying to transact something back in 2000. I think I was 20 when I was in 2002. Like, I can't even imagine. What are some of the biggest things that you've seen in this industry that's changed?
My God, there's so much. Like, the business today is so much simpler than it was back then. Like, it was literally bootstrapping. The only things we could do to get deals back then were driving for dollars, putting out bandit signs, and if you could figure out Chris Chico's postcard, right? Like, there was a little bit of yellow letters going on. Like, that was what the industry was. But it's funny. So you're thinking about when I started, I talked to Lou Brown, and I'm like, Lou, how the fuck did you do this in 1975? Like, what did you? Can I swear? I'm sorry.
Yeah,
I'm
you
like,
could swear.
like what?
Yeah,
How
that's
would you
crazy,
find
right?
something like we had Real Quest, which was like a baby version of like Prop Stream. And so I'm like, Lou, like, what did you do? He's like, well, we opened the newspaper and looked at for rent ads, and that's how we comped. They would open the newspaper and look at houses for sale because remember, I don't remember this, but it'd be like West Side, and it'd be all the houses for sale and what you know what I mean in each part of
Yeah.
town.
Oh
And
my God.
That's crazy.
comped. Like when I started, you know, we had like online was just it was just happening. Remember it in 2009, like Google wasn't a thing, Facebook wasn't a thing. When I read Rich Dad Poor Dad, and at the back of the book he says go find a RIA. Like I got on this big monitor, you know, with this big clacky keyboard, click 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 click, and I was on web crawler to go find a local real estate group. Like
Wow.
so, the world has changed so much. The access to data and the ability to just pop in and out of markets like you're doing now, Stratton, is just like that didn't exist back then. That wasn't a thing, right? List source was there. You could pull some lists, but you couldn't get like probate and
Super
you know,
niche.
all this shit that you're getting instantly now. Back in the day, I paid a company called Foreclosures Daily, and they were only in Florida at the time. And their whole gig was we have a person in every single county that every single day goes into the
down.
office, writes all the stuff down,
Everything.
comes back, and we release it at 10 p.m. So at 10 p.m., I'm living in DeBary, Florida, somewhere, Orange City, Florida at the time. And 10 p.m., we would go in, we would access the software, download the Excel list, put it into mail merge, print off these letters. You know, me and my wife are, you know, licking and stamping shit till 1 a.m, and every day we would go drop those pre-foreclosures off in the mail. So yeah, it's
Was it significantly less competitive though? Like was stuff like falling in your lap just because like no one else knew how to do it?
No, there was definitely competition. I mean, I was in Orlando. There was a wholesaler on every corner. There was plenty of competition. And even now there's competition, but let's be real. Most people fucking suck. Most people don't answer the phone.
Yeah.
Like I play this game when I travel. I love doing it if I rent a car. And as we're driving, we'll call signs. We buy houses signs just to see. Like usually it takes 7 or 8 people to even get someone to answer the phone or call you back. But no, this is terrible. Like our business, our industry, people pay for this stuff. They put ads, they do PPC, and they don't pick up the phone.
They don't follow through.
Yeah.
I love it.
It's crazy.
Realtors, same way. They suck even worse. So yeah, so lots of changes, guys. I mean, we could talk about that all night. It's wild.
That's nuts to think of. Like, I mean, 2002, I was like 8.
That's crazy. Yeah.
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 Yeah, in the beginning, it was. I mean, we'd buy off of MLS. You know, here's a funny thing. One of my first mentors, I remember him telling me, every day a girl in my office faxes out the property list. Like she had to literally sit there and put it in, dial the number, or go through, and she like 100 or 150 people. Like my first RIA, that was a thing. You'd go there and you fill out the little sheet, right? Name, phone number, email, fax number. Like that was how you got stuff. So what they did before that, I can't even fathom.
I think it's pretty crazy to see like how access to information and all this technology has compressed the learning curve for most people. And then I hear lots of new people complaining. And this was, I think, the biggest takeaway for me. What you were saying, among other things, was lots of people complain, the market's flooded with all this competition, but your competition fucking sucks. And that's exactly the big takeaway that I heard. And it's just like, even though it is easier to do all of this stuff, it doesn't change the fact that you've got to do the hard work of picking up your phone and answering there and following up and doing all that stuff. And that's where most people drop the ball.
Lazy, and the competition is mediocre on its very best day. And, you know, I think, and this is something I think that probably applies to all the way down to like our school system. Kids today, compared to like my mom, who's 80, you know, they didn't have a ton of information back then, right? You had your one Encyclopedia Britannica that the whole grade probably shared. So they didn't have a ton of information, but kids were taught problem solving and, you know, creative thinking, and like they were just taught different. Now, I think you have so much information at your fingertips on these phones. There's no like kids just aren't
figure it out.
Yeah, they aren't taught how to figure stuff out and connect the dots and do all of that stuff.
Yeah.
So, you know, that's definitely come to play in real estate, right? People have just gotten lazy, fucking lazy.
That's my number one phrase to my son is figure it out.
Yeah.
Like, he'll like come and ask me for help. So like that's what helped me out the most as like a child and like a teenager is either my dad or my godfather would be like, hey, this thing's broken. You guys gonna figure this shit the fuck out.
Oh,
And
yeah.
the four-wheeler's broken, Stratton. Take it apart. You guys gonna figure out the instruction manuals over there, like the owner's manual.
Yeah.
And like that was some of the stuff, but it made me think creatively a lot more.
Yeah.
To where
My dad-
Zeno would just rely on me all the time.
He was brutal. It'd be, figure it out, or you should know what wrench I need as I'm working on the car. Like, okay, 12 millimeter. Fuck, I don't know, right? But yeah, it was it was a different time. I think a lot of these kids now are soft. I don't know.
Yeah.
David, with everything that's going on, did you
Yep.
see a drop in transactions before the election?
Yeah, 100%. From about July on, we definitely saw. Now we're growing, so like our total transactions were increasing. So the way that we have to look
But
at
the
it is,
growth rate slowed.
yeah, divided by
What do you think that was for?
I think there was definitely uncertainty in the market. I mean, people, businesses, corporations, nobody likes uncertainty. Nobody likes to not know what's coming next.
Mhm.
So, and it was this weird thing. You've got Trump, who's fucking erratic, like he says crazy shit, which is awesome. But then you got the other side, and they don't trust the other side because the last 4 years hasn't been good. So it was just like nobody, I don't think anybody really knew or was comfortable with what was going to happen, even though like the underlying markers of the economy were okay, right? Like inflation was coming down, like stuff was, I was just at the ALTA convention, the American Land Title Association, which is the big underwriting association for all title companies in Orlando back in October. And they're like, hey, pretty much the economy's in good shape. It's the best economy in the world, but we have low consumer confidence. Like it's just,
Okay.
so even though things seemingly are good, like not perfect, I get it, right? Eggs are still
Yeah.
a dozen, right? But like consumer confidence is bad, which no matter how good shit is, if people think it's bad, it's bad. So I think that's the thing that we've seen in the market in the last 2 weeks. One of my partners in our title company, she owns a separate standalone title company. And she's like, literally from the day of the election, like her business, tripled. Like, because all those people that were waiting on the sidelines, now they knew. Like Trump or hate him, like who cares? But now you know what the future holds.
Yeah.
Have any of you guys, Dean Stratton, noticed an uptick in your business since the election? Have you seen either through number of transactions, calls in, any KPIs that you're tracking? Yeah.
We get more.
I mean,
interest.
I can just say that our beginning of November was slow, and
Yep.
then last week we had 6 deals that we got.
I saw you post earlier. They were good.
Yeah. So I mean,
More sexy
we
KPIs.
had the KPIs were hitting sexy. We had a decent amount of leads. It wasn't an overwhelming amount. We had a lot of offers out, which means we were having better conversations and we had more deals under contract. So I can just speak from that last week's experience. It definitely was an uptick for us.
What about you, Jason? We just saw
Yeah,
more
we did.
buying activity.
We definitely noticed what David was saying. There was some sentiment from a lot of the sellers that was like, hey, we're just going to wait and see what happens. We're a couple weeks out. We're 30 days out. We're whatever. We're just going to kind of wait and pause. I think there was a collective sigh of relief after the election. And then I think everybody now I feel, and I think I saw something the very next day in the capital markets. They had the biggest one-day gain, I think, in the S&P in the history of like how long they've. So that there's proof right there that I think a lot of people were happy with the result. So yeah, I've seen it as well too. We've seen an increase in both call volume, lead flow, contracts. Everything I've seen in the last couple of weeks has ticked up.
Yeah, we've been watching it, on our side in our businesses, because for us in the transaction and title business, we're like standing on the beach, sort of watching the tidal wave, trying to judge how far away it is, and because we have to hire, like it takes us 2 to 3 months to really get someone fully 100% up to speed. So for us, the minute we saw that, like, okay, we need to start hiring some people because we know that at least in our industry, we recognize having somebody with business and real estate experience is probably going to be good for us. There's probably going to be less regulation.
How hard is it for you to find talent, David? And what's the ideal person look like in your business dealing with these transactions? We our phrase that we like to say is that all deals go to die at escrow, right?
Yeah.
Because usually time will kill your deal. Unknown or unforeseen obstacles with title or new things that are being presented to the seller will, just derail the momentum, get them frustrated and get them to just want to maybe, cancel the whole thing. Or some of those things are not really easy to overcome in the first place. So how do you find the right people to come in, that can be part-time therapist, part-time problem solver, part-time hustler, get stuff done.
Yeah. It's a challenge.
Person.
Yeah. So, yes, a couple of things there. One, and I talk about this, but 50% of deals are never going to close. That's just a fact. A nationwide average, if you're the local model guy and you buy yourself, cool, you're going to close 80%, 85, maybe 90. But virtual wholesalers, we've seen it as low as 15%, right? 20%.
Wow.
Especially when you're going into a new market, right? There's always those
Yeah.
learning curves. So yeah, so that's a problem. And since you brought that up, for us, it's a challenge because we are only looking to hire people who have some type of experience in real estate or real estate adjacent, right? They come from the insurance business, which to us, luckily, Chattanooga is a little bit of a hub. There's Unum, Blue Cross Blue Shield. So there are a lot of people there that we can hire because what we're looking for is the opposite of you, Dean. You're like the talky guy. You want to go out and be making deals. You're kind of, you get jacked up on, I got 26 deals or 16 contracts. I got all those things. Yeah. Like transaction coordinators are the opposite side of that coin. They love problem solving. They love being in Excel. They like, making notes. Like they can write pages of notes where all of us are like, fuck this. I'll remember later. I'll just come back and do it later. So it's really a different personality type. So we can draw on people that have been in those industries. We're always looking for like real estate people with title experience. We have one girl who did collections. So the answer is it's hard, but we have a pretty good pool of people to hire from here. We're a big technology hub as well. But even hiring in a title agent, that still takes a ton of training because, 19 out of 20 title companies just deal with a $400,000 or in your guys' case, a $1.2 million house that was sold 3 years ago. And there's no liens on it, no encumbrances. It's just easy peasy, boom, ding, boom. And we're going to make a nice fat title policy check. We're dealing with investors who bring the fucking crazy, right? Because what do we all do? Every single one of us, we're building a list. We're going out there. We're looking for people with problems.
Problems. Yeah.
Divorce, taxes.
The crazier the people.
More problems, the better. Yeah.
You and your people must love drama.
Oh, dude, we hear crazy shit. So the more of those problems that I can solve on the acquisition side, right, the deeper the discount. Awesome. Yeah. But when I get over to the dispo side, what do I say? Hey, Jason, got this great deal for you, man. It's going to clear title and proration of taxes. Can't wait to close. Well, that's the fucking Grand Canyon. You got to take all those problems and clear them up. Whether it's, the buy here, pay here car lot or the lien from Lowe's for the windows or, the missing heirs or the person in prison or somebody overseas or, the one heir who's trying to screw two other heirs. I mean, it never stops. So yeah, we just test them and, do
you guys do PI tests, David? Like what would be the number one PI test for someone who works for? We
just test them. Typically we really will, we've done this enough that we know who we're looking for. But we'll bring them in afterwards and we'll disc test them. And mainly the reason is I already know that they're the person for the job or that they can, on paper, they can handle it. The reason that I disc test them is I want them to understand who you are, right? I need them to understand who our client is, right? Very frenetic, very hustler. They're running around. They're, going from deal to deal. They're probably unorganized. Their accountant hates them. Their bookkeeper hates them, right? Their lawyer hates them. They don't do anything on time. They don't sign shit. They don't get back to you. So it's important for us to make sure they understand who our clients are so that they don't get frustrated with them, right? They have to understand that, we're here to help them, but here's why, right? You can't do the shit that they do and they can't do the stuff that you do, right? So we are in this together. We get as integrated into your business as we possibly can. And so that's why we run it then. And that's why it's important. So we do that. And then we do a lot of training off of
that. So with everything going up, you saw an immediate tick as soon as Trump won.
Yeah, 100%. Especially
how much of an uptick? And then how many deals in escrow did you
pull out? I would have pulled all those numbers for you. I don't know. I can get them for you though. It was noticeable though. Like my partner who runs a title company, it was very noticeable. She said literally the next day people started putting in offers on the retail side. So I think that we could see that that's where we're going. I think everybody believes that Trump will somehow get interest rates lowered. I mean, the other side was going to give $25,000, which, both of them, we all make money. It doesn't matter to us, right?
Yeah.
$25,000, I make an extra probably $1.5 million just because the value of all my houses went up. Or, we drop the interest rates, that's going to raise prices and we're all going to get rich together. So I just believe people needed to figure out what it was going to be.
I have a. Will your title company release EMD?
If your contract's written correctly, sure.
There we go. That's all I wanted to hear. I feel like
Release the buyer's EMD.
Yeah.
Yes. Release the snake who tried to like dog you. Like, hey, you gave me non-refundable EMD for a reason. I have in my document that if you mess this up, we get you EMD.
Yeah. So that happened to me years ago. It's actually a really weird story. When I was wholesaling, I used to only collect, this is when this happened, maybe 8-10 years ago, but I would collect 2K EMD on everything. And we get ready to close and the buyer's just gone, like gone. Can't find him, can't get a hold of him, nothing. So I went and found a new buyer, sold my deal, closed on it, and went to the title company. This guy's name was Chuck Costa. He's passed away now, but I'm like, hey, I need Chuck's EMD. Well, your contract doesn't say he can release it. You need to get something signed. I'm like, this guy could be dead. I don't know where he's at. And it says it's non-refundable EMD. They're like, yeah, but you need something more. I'm like, hold please. I typed up this thing, and it's a clause. You can see it. It's in the portal. It says something like it's like the last clause. It says the buyer hereby authorizes our company NPL Investments to or like for the title company to be dispersed to NPL Investments if this deal does not close. Some verbiage like that. It's like 2 sentences, but that sentence was enough, and I had to make sure they ran it by First American, so that if that happened in the future, no bubbles, no troubles, right? I can get access to that. Now, if I couldn't provide the house or the buyer and the seller to show up, well, then that's on me. I'll release it to
100%.
you. But yeah, I mean, that whole contract that we have for all of our clients, it's born out of problems, right? Like we try not to fuck the same stuff up over and over and over again. But the thing to understand that most people don't, and that I had to learn about 2 years ago when we started this journey, was title insurance is literally an insurance game. Like it's in the name, it's insurance. And what do all insurance companies want to do? Not pay, right? Nobody wants to pay. Not that it's me, but it's whoever underwrites the deal behind our title company, right? It's First American, Old Republic, WFG, whoever. I don't know. There's about 10 big ones, but they're always going to look for a reason not to pay, right? Was something missed, or did the title company screw this up and we're not going to be liable? And, so the way title insurance, do you guys understand how title insurance, that business works?
Yeah. No? Jason, I was interested. I wanted to bring up your deal in Hanford and how title insurance would be used on that one. That one that went south where the dude scammed the judge.
Oh, yeah. Let me tell you on the front side very quickly. So, Jason, I'm going to buy a house from you. It's a $100,000 house. Let's just use even numbers. The title policy is $1,000, right? So that's what you're going to pay, or somebody's going to pay at closing as the title company. So the way that my agreements work with First American or Republic, whoever our underwriter is in that state, it's some type of a split. 70-30, 80-20, 90-10 maybe, right? So what does that mean? Let's just say I have an 80-10 split in California with First American. Of that $1,000, I'm going to get $800, and First American is going to get $200. Great, right? Also, title is not the most profitable business there is. So that's the good news. The bad news is if I fuck something up and don't collect the right amount of information, or I miss some nephew that was on fucking title or some bullshit like that, and there becomes a title claim that's legitimate, and somebody has to pay out that $100,000, guess what my portion is? $80,000.
Oh God.
Because I'm on an 80-20 split. If I was on a 70, it'd be 70. You know what I mean? So when people call up a title company like, just force this through, this is a bullshit lien, that's the risk. That's what you're asking that's what you're asking your title agent to do. To go to bat for you on that 80 grand.
Jason, I can't hear you.
I'm curious to hear your thoughts on this one. So I'll give you the condensed version of this story. So a year and a half ago, I bought a house from a guy. He went straight to our website, submitted a lead. He had hired a local probate attorney, got everything approved by the probate court, submitted all the documents to title, underwriter approved it, facilitated the sale. I paid cash, just used my own cash because I thought I was just going to be in and out of it really quick. Long story short, he faked out everybody, like completely fraudulent, was not even related to the family member of the people that died, fooled his attorney, fooled the judge, fooled, the title company, and the actual sellers, which is even crazier, went to probate court 2 weeks after the same judge approved the sale to the guy that was a fraud to the actual owners. Like, he looked at the same exact property, approved it, all that stuff. So I ended up having to file a title claim. A year and some change later, they ended up paying me out. So I got all of my money back.
Yeah.
So you're saying in that particular situation, Fidelity, I think, was the title company. They're eating, depending on the split, 80% of that, and then 20% comes back to the title company.
So that's where it depends. So when you're doing abstracting or underwriting, there's a portion that the local title company does.
Yeah.
There's a portion that the underwriter does, right? Think of the underwriter, I don't know, and they're in Denver, wherever they're at.
Yeah.
Wherever that, they've got an office full of these underwriters. If it's their mistake, no problem. They'll cover it all. If it's your mistake, you're going to cover your 80%.
So in that situation where it's just all fraudulent stuff, it looks clean. Like,
that would on Fidelity. But they're going to, again, it's an insurance company. They're going to drag it out. They're going to sue him.
Yeah.
They're going to police involved because it's fraud. Yeah. We see it all the time, man. I've seen fake deeds popped up where they went online, they downloaded a deed, used some kind of software to pull off the notary stamp, put that on a new deed and close on it, or go file it and take possession of the property. Like, it's crazy. It's fraud is the biggest problem right now. There was a lot of, we were in Orlando for 3 days, and that was probably a day and a half over 3 days was dealing with fraud, wire fraud.
So how do you mitigate that risk? Because now you're doing all of these transactions, right? You're doing them for people all over the country in all 50 states. Yeah. Like, I mean, there's got to be some risk mitigation. Does it reach a point with you where you just say, listen, like, we're capped on this particular type of deal or capped on volume, or how do you guys calculate that?
No, I mean, we'll do 3,300 files this year. So our team has a really good spidey sense. Like, this is all literally the only thing that they do all day long.
Yeah.
So they get a really good sense very quickly if there's fucking shenanigans.
Something off, right?
Yeah. Go ahead.
No, David, I'm not stopping you. We just raise the fingers for each other.
Okay, cool. So they can just tell, right? You can't get somebody on the phone. They only want to do through text, right?
Yeah.
And
we
like,
just had one of those.
Yeah. We have a couple of backup things when stuff starts getting weird. We'll be like, hey, we need to jump on a Zoom and just do a verification call, or hey, I need to get your ID, right? Like there's 2 or 3 things that we can do, like, that are just like, let's just see, because some people don't want to talk on the phone. So that happens. But yeah, the place where we see the most fraud, like over and over and over again, or attempted fraud, is you 3 are brothers, right? And Dean's like, yeah, I'm the only heir, and then it gets back to, you're like, because what's the first thing when you have a dead person? You request a death certificate and an obituary.
Yeah.
Why? Because most people don't think to lie the day that daddy died, right?
Yeah.
And obituaries are a weird thing. If you've ever had somebody pass away in your family, like, you feel obligated to list every single person. So that's why underwriters like to get an obituary. So that you request an obituary and the death certificate. And I'll be like, Dean, says you got 2 brothers. Oh, yeah. Yeah, well, they're dead. And then we, of course, search them, like, oh, there doesn't look like they're dead. Well, yeah, but one of them's in Europe. Like, these stories just fall apart pretty quick.
They're dead to me.
They're dead to me, those motherfuckers. Yeah.
So how much on a percentage wise, how much cash do you have to keep on hand for like these incidents of title issues? Yeah. Like, what is it? 1 out of every 1,000 there's an issue? Like, what are the numbers on that?
You have to be bonded, but you probably have to have about $1 million between all the different states. Like, Texas was the worst one for us. That was a challenging state to be in. California, honestly, we'll probably never be in California because I think it's a $2 million bond or escrow that you have to have for California. So we'll only probably partner with title companies there.
Wow.
Yeah, it's crazy.
Wow.
Yeah. So the thing, it was about 2 years ago. Heather and I were coming back with Eddie Speed in Dallas, and we were driving back to Tennessee. And we were trying to think of, like, what are some ancillary businesses that we can run around our transactions company to grow and help our clients and do all those things. And we're like, oh, a picture service, a notary service, whatever, all these different things. I'm like, like, title company? Are we smart enough to be a title company? Can we do that? So we explored buying some nationwide title companies, and we went to my partner now, Megan, because she runs a really big investor title company here in town. And she's like, yeah, you can do it, but it's probably going to take you a year and a half to get set up completely. I'm like, no, we're investors. We can do it faster. We'll just throw money at it. We could just hire attorneys. And it took a year and a half, exactly like she said, because you're working on the state's timeline and the states don't give a shit, you know? So, and it's endless amounts of paperwork. If you like paperwork, you should be in the title business.
David, you are around like probably some of the biggest, savviest guys, been in the business forever, right? I think lots of people we're kind of in this just weird, wonky real estate market that we're in right now nationally, right? What are the indicators that either you're seeing personally or stuff that you're picking up that maybe you can share with the audience about real estate market going into 2025? What do you think about rates? What do you think about just general sentiment on the market for real estate specifically moving forward into the new year?
Yeah, I feel very encouraged. I think that just after the election, like everybody got excited. Like everybody in the real estate business is excited. We're going to have a president again who, you know, we had an incredible boom time with. He's a real estate guy. He understands that interest rates need to be kept low. So I think that going in, we are very bullish. We are hiring right now. Like we are building our team, anticipating that in March and April, you know, good stuff happens. Two, you know, rates are already, I don't want to say historically low. On a 50-year average, rates are low. The 50-year average on interest rates for single family houses is like 7.7%. So 2 was ridiculous. Like it was crazy. It's never going back to 2. Anybody who's waiting on the sidelines for 2% is just not going to happen.
Come on, it could happen.
Don't buy a McMansion with 2% debt.
Yeah, man, I'm waiting. But get a fat crib.
Yeah, I had $1 million worth of properties. I should have refinanced at the time. But everybody seems to think that it'll get to about 5.5, which is a very good number. So, you know, what I've been telling people is you should be buying houses at 7 and 8% interest. Why? Because we know at some point the interest rates are going to go down. The minute interest rates go down, prices are going to shoot up, just like they did before. So why not buy now, have that little bit of a higher interest, ride it out until next year when the interest rates continue to drop? Because the Fed's been trying to bring us in for a little bit of a landing here for a while. So we knew rates were coming down. I was hoping it would be quicker. So the outlook that we see is good, is very good, you know, which honestly, all of that is a little bit stunning, right? Because to hear people, we kind of started with this, running around like, oh, there's no deals. It's so fucking terrible. It's the end of the world. I'm getting out of the business. If you mean to tell me that you could do deals when the market was red fucking hot and every Sally, Joe, and Penelope knew that she could put her house on the MLS and make $1 million, and you could go do deals then. You're telling me that when the market is slow and people can't sell their houses, and now days on market is 45, 60 days, you can't find a deal today? Like, that's reverse thinking. It doesn't make any sense.
And a lot of the fly-by-night people are starting to get weeded out of the business too. So I think your competition is actually dissipating, going away a little bit.
But this all goes back to mindset and consumer confidence.
Yeah.
You should be able to do deals when the market's bad. That should be your best time, right? I made boatloads, ridiculous money in 2009, 10, and 11. And what's Dan Rather doing every night on the news? So we don't know if the stock market's going to open tomorrow. Man, we were out here just fucking shooting fish in a barrel. So that thinking has never really jived with me. I don't understand that. You know, if you think as a wholesaler, you can go out and get somebody's house under contract and that person knows they can put it on an MLS, but you can't do it today when people are struggling and the news is bad. Like, I don't.
That's very true.
Because I don't understand. I think that's just the weak mentality.
So, David, you got a unique perspective that most people don't have. You get to see some of the biggest operators or some of the most successful operators in the country, and you're either maybe having conversations with them or you're getting a firsthand look at what it's like to work with their team, seeing the type of transactions they're doing, you're seeing the type of money that they're making. What are some distinct things that some of these top performers are doing in their business that's different from the rest, right? There's probably a 1% of the transactions that you see that are the top of the top performers, and they're probably doing something distinctly different than the rest. So what are some of those things that you're seeing that is helping them stand out and get the results they're getting?
Yeah. So a couple of things in there, because we've seen some of our largest clients. I want to break this into two parts. Some really big clients who depended on hedge funds a couple of years back literally dropped almost nothing. These guys, I'm not going to say where they're at, but they're a big company. Like they literally got this whole new office, 15,000 square foot, and it was down to like 4 people. But the owners pitched in. They pulled up their big boy pants and they went in and they started going back to their roots and doing the whole
I love it.
So there were definitely people who struggled because they were so dependent on one strategy, right? Which was hedge funds, right? We all know people who went crazy on the hedge funds and made money, but when it stopped, they were so unprepared to do anything else because they never had to do that, right? They came up in the boom time a couple of years ago. So the people that we're seeing that were successful leaned into Novations a little bit early, right? They had multiple strategies. Weren't afraid to do sub two assignments, some creative type deals. So they were able to pivot a little bit. And that has always been like the theme for investors. At least that's the way I was taught, right? No matter what the market's doing, we have the ability to shift, right?
Adapt,
right off the feet, right? Probably not as light as Dean, but pretty light. So whether the market's up or down, we can always be faster than the government, right? Any regulation that they put into place, we as an industry someone's going to figure out how to get around the South Carolina thing or the Ohio thing or whatever. Yeah. So I think the things that I see are, the ability to pivot very quickly and make some decisions, to be able to look at their business and go, oh, hey, what I was doing 3 months ago is not working anymore. Maybe I need to start looking at something else without becoming the shiny object guy, right? Whereas, those people who are storage, land development, they're all over the place. But then the other thing that we really see with the well-run teams is a division of labor, right? They don't try to have one guy doing acquisitions and dispositions and transactions and bookkeeping and, like those people struggle, right? And those are the people that we try to have weekly calls with and bring them on and help them do some business development. The people who are thriving, are running a real business, right? They've got an acquisitions team. They've got a separate dispositions team. They're clearly using us as transaction coordinators, but they've got specialists in their company, right? Their acquisition people are the best they can possibly be. The dispo people are the best they can be. Does that make sense?
Yeah. Absolutely. So you mentioned some of those strategies. You mentioned Novation, sub 2, just being able to pivot. It seems like from the conversations that we're having on the Deal Champs podcast is that one of the strategies that is really successful right now is either doing a full-blown novation or just simply listing the property on the MLS as a cash deal and then taking it off the MLS once a buyer has been found. So are you guys actively participating in that part of the transaction to any extent? And what does that look like for you guys? What makes those type of transactions successful and go smoothly?
Well, I can't list it for you because I'm the transaction. So I'm not a principal in the deal, but we are very involved in working with realtors and different title companies in other states where we're not licensed. Trying to remember the rest of your question. I think
just what makes those deals successful, because they got, it's a little bit, I wouldn't say complex, but it's got a few more moving parts.
Sure.
And so for you guys to come in and help facilitate that transaction when we're potentially dealing with a retail buyer, a retail buyer's agent on the Novation side, right? If we're doing listed on the MLS and deal with a buyer, we might not be dealing with our everyday investor buyer. We're dealing with a mom and pop buyer or what we call a retail investor buyer, right? So what does that look like for you guys and how to kind of handhold those type of transactions?
100%. First, let me say that the guys who are succeeding with working on MLS are not trying to squeeze, just like in a wholesale deal, they're not trying to squeeze every dollar. If this house and its as is condition is $250, they're smart enough to go out there at $237, right? Because our goal is we still got to get in and out of these things quickly, unless you have the wherewithal to close on it. On the other side, let's just talk about Novations because that's the easiest one. That's the most common, where you're exactly right. If I was selling to Jason and it's a wholesale deal and it's a cash deal, he's closing and something happens at the title company, I'm like, hey man, we're going to change from XYZ title company to, key title, they can do it faster. It's not going to be a problem, right? You're going to understand you may not love it, but you're an investor. But dealing with retail buyers is a completely different thing. And this is where I feel like we get involved always in these after a client has had a really shitty one and they lost an $80,000 deal. But we try to explain to them, like, listen, novations they're very profitable, but they're different. They're a little bit weird because if you're not working with us, you're just trying to randomly pick some title company out of thin air who, maybe that title company would do a wholesale deal, but that doesn't mean they'll do everything, right? All title companies are not created equal. Somebody who may do a wholesale may not do sub 2. They may do a sub 2, but they won't do novation. They may do novation, but they won't do a sub 2 assignment on a VA loan or FHA, right? So a lot of times we see people picking the wrong title company, and then their dispo person who's supposed to be selling is all of a sudden also the guy doing the TC work and calling up title companies and being like, yeah, hey, so I got this novation. It's a replacement of contract, and they just verbally throw up on these people, and the title company's like, yeah, I'm not fucking doing that. Again, insurance business, right?
Yeah.
Their concern is that they're going to get involved in something that's going to get them sued, right? So that's honestly your best case scenario because you don't start down the road. The worst case scenario is you get some secretary who's like, yeah, just send it over. And then a week from closing it dies because now they don't
exactly.
On the dealing with the realtors, just as precarious, right? Because I'm not dealing with you guys. I'm dealing with some EXP realtor who barely made it through his class to start with. And he's never dealt with an investor before because to him, this looks like, smells like, talks like a duck, right? It's a retail deal. And when, somebody sends the wrong file over the AB contract instead of the BC contract, and, the agent starts to get spooked, and then the agent spooks the seller, and then everybody's like, it's a scam. I'm not going to do this. Like over and over and over again. I take calls from people who are like, what could I have done different? I'm like, everything.
Yeah.
Just let do it. We do this every single day. We understand how to talk to agents and title companies and not blow up your deal, because again, it's a scammy culture out there, right? Like it happens. So those are definitely problems. 100%. That's where the pitfalls happen on MLS. Plus, if you're not being transparent on the novation deal with the seller, you get people running through the house with agents, and it can blow up easily. It's a great strategy. You can make a lot of money. You can help a lot of people, but it's easy to fuck up.
What are your thoughts on novations in general? Yeah, I know that's I know that's very in vogue right now. It's become very popular. It's increasingly becoming popular. Do you see from the title perspective, and maybe with your investor lens on too? Do these have a long runway? Are we getting close to the end of shelf life? Like, what are your thoughts in regards to the legalities of some of this stuff? And is it becoming too popular that it's just gonna burn itself out?
Yeah, is it gonna sub to itself?
Is it gonna? I think sub 2 is likely to get. Sorry, sending me down a road I didn't plan on going. I think sub 2 is going to get regulated way the fuck before novations.
Wow.
Yeah. The idea of sub 2 is being investigated by SEC and FTC and all of those. But I think a novation at its core is you have one person acting on behalf of somebody else. So that's no different than an executor of an estate, right? I mean, I also didn't think they could ever do away with assignments, but South Carolina said, hold my beer. But so I think fundamentally the process is sound, right? I think it should last for a while. I think the idea of sub 2, there's so much fraud and banana heads out there doing this that are leaving sellers high and dry that's regulated quickly. I mean, in the next few years, I feel like it's got to, right? I mean, you've got these people running around doing 70% of what they're taught, just winging shit, telling people crazy things. Go get a home equity line of credit, take that money, I'll make the payments. I mean, it's crazy. And all that stuff is on the radar of the government. They're watching all of them.
I think novations, to me, a novation on an owner-occupied house is sketch. That's when it gets wonky.
Yeah.
We have a couple of them that may work. Yeah. And if the seller's not 100% on board, that's when the novations get dicey. Because we have 2 of them coming up with you guys. That'll be novations on owner-occupied houses, and I'm glad we have you.
Yeah. And to kind of go back to Dean, what you had said, or Jason, whoever asked that question, was and this is the problem that I do see in our industry, is we learn one strategy and we're going to shoehorn that motherfucker into every single deal. Every deal is going to be sub 2. Oh, what? You have 100,000 in equity? I'm going to give you 80,000 down and I'm going to take over your mortgage. Bro, that's dumb. It's a $300,000 house. Just, you could put less money down on a 20% conventional.
Exactly.
Loan, right? So, and you see that with Novation too, right? We see that with the installment method. We had one of the biggest installment method clients in the very beginning, and it took a while to get them to understand that just because you can do an installment doesn't mean you should. Like, it's just a wholesale deal, man. You need to be able to apply the right fix to the right problem, right?
Mm-hmm.
So that is something that I see, and that probably accounts for a lot of the problems. Is, I think you need to talk to the seller, figure out what the problem is, and then solve the problem. Not go into it with, I only do Novations because I can make more money this way by putting it on MLS, or I'm going to take over your property sub 2. I don't have a mortgage. Well, go get a line of credit and then you'll have a mortgage. I mean, it gets silly. So that's the place where I think we're the most exposed, and we're real estate investors. We don't have anybody sticking up for us.
That's the craziest thing I've ever fucking heard. Telling someone to go get a line of credit on a property that's free and clear.
There are a lot of videos out there from very famous people teaching people how to do that.
Just buy owner financed.
Yeah, I agree, man. I agree.
That's wild.
So, David, I got to ask, you've been an active real estate investor for so many years, right? You've done all sorts of different transactions yourself. And then you had this wild hair up your ass that said, hey, you know what? I want to go
in the worst
these
possible
problem properties that I'm used to dealing with, and I want to amplify it times 1,000 and do this for everybody else across the nation. So tell me about your deep-rooted passion for solving problems and solving problems for other people that led to easy REI closing. Right. So, tell us about that, and then I want to know where you guys are taking it, where you guys see the biggest growth opportunities. So I got some piggyback questions, but what would you go say? Hey, I'm crazy. I want to deal with other people's crazy stuff.
So the one thing that I had always specialized in, and in Investor Lift, I coached a lot of teams, and I had a coaching program, was in dispositions. Right, that was kind of the area where I had a lot of students doing that, and just by default, because that was what I handled in my own business when I did have a partner. So the dispositions and really the transactions portion of the deal. And that even goes back to 2007, 8, 9, when I was having problems with title companies, and, deals were constantly being shot down. So when I first moved to Chattanooga, what does everybody say? Go, and let me preface, Orlando, investors on every corner. No, there was no full-time wholesalers in Chattanooga. It's 300,000 people, but no full-time wholesalers. So we really were kind of the first people here to do that. So again, what does everybody say? Go find an investor-friendly title company. Well, what the fuck does that even mean, right? So I had somebody who would do some wholesale deals. So I would take these deals over constantly. I'd like, bam, another contract. And 1 out of 3, this attorney would be like, oh, Davey, this one has a dead person. You're going to have to go.
Is it an attorney state in Chattanooga? Or
no, but it just happened to be owned by attorneys.
Okay.
So, new contract. Oh man, this has got this problem. You're gonna have the seller do a super quiet title, right? And it was 30% of the time I'm literally just throwing contracts away, which at the time were $10, $15, maybe $20,000 deals. And I remember this one day, I just come from this old lady's house, 90 years old. I remember it clear as day. And I go in there with the contract, and he's like, oh, let me look at it. Tell me about it. And some bullshit, I'm not gonna be able to do it. And I'm like, Jeremy, what the fuck, man? I just told this lady that we can do this. There's got to be a way. And he just looked at me, and I'm thinking to myself, oh fuck, I just should not have talked to my attorney that way. And he leaned back, and we also called this guy Dr. No, because he was like the James Bond villain. Everything was no. Well, I guess you could do it if you could do this and get that and do this other thing, maybe I could close it. I'm like, okay, great, that's good. But I left there and I'm like, how many deals have I thrown away by not knowing how to ask them?
Because you didn't press the attorney. That's a huge thing with attorneys and accountants.
Yeah. Well, all of them too, like doctors, we put them up on this pedestal that they're so smart. But again, it's a title business. They don't want to take any risks that they don't have to, right? I mean, have you ever called an attorney and asked them any kind of question? It's always like the platinum answer. Right? It's going to be the answer that involves 6 people, 2 paralegals, 14 days in court, right? It's always the highest billable day, right? Instead of dude, I just need the bronze plan. I just need clear title and get this fucking thing closed. So that had always been in the back of my mind of like, okay, how can we do this, right? And that was something I taught my internal coordinators when we were wholesaling. So anyways, to get to your question, teaching a lot of dispositions. Even in like the cartel, guys, like a lot of them would call me for title issues just because, I've been too dumb to quit. So I've been around for a long time and just know a bunch of stuff. But we're at the very first Cartel Boss meetup in Cancun, someplace down there, or Cozumel. And I'm with Corey Geary, Corey, and talking to him and Robert. And I'm like, you know what? I'm kind of thinking about opening. I think I'm going to open a transaction coordinating company. Like it was just like we had just thought about it. I said, there's nobody in the business that does that. Certainly nobody that does it at scale. And Corey's like, that's the dumbest fucking idea I've ever heard of. He's like, that is absolute brain damage. I'm like, yeah, but I think it's going to work. And he's like, you're out of your fucking mind. He walked away, and Wensley's like, yeah, I think it'll work too. I think there's definitely a need for that in the business. So yeah, I think that we saw that it was something that was, first off, nobody taught anything about it. Certainly, people barely teach anything today, even about dispositions. But I saw even people operating at the highest level who were throwing deals away because they didn't understand how to do it. And then once we got into COVID, here's what happened. Actually, this office that I'm sitting in was my TC room. And, when COVID first happened, right, we all thought it was the end of the world. So a lot of guys, Nick Perry, Corey, like a lot of big wholesalers that I'm friends with, let their people go because we thought it was stopping. And it stopped for what, like 4 weeks, and then all of a sudden it got busy again. Well, people were asking me, hey, do you have some coordinator? Can you help us close this deal? Can your people help me pitch in? I'll pay you for whatever the file was. So that was sort of the thing where I'm like, oh, we can really do this. This is something that, that we can really open up and start. And we spent about 6 or 8 months kind of building it, trying to break it, doing deals just for Corey's team. And
how hard was those initial, that first year? How hard was it to take on other people's problems and problem solve? And make sure
it was a huge learning curve, man. Like, because I don't know if you guys are like me, but I'm like, everything's going to be great. We can figure this out. Bing, bang, boom. We're gonna create this little
service businesses are hard that way.
Yeah,
that's what the service business is something you don't expect.
Yeah, it's gonna be super easy. We're gonna find one nationwide title company. We're just gonna have an exclusive deal with them. Initially we hired 3 coordinators. Like, we're just gonna send all of our deals to them. Everything's gonna be great. And we broke them. We've broken all of the big national title companies because they all say we can do all the deals you can send us. And I'm like, okay, here's 30 files. Right? They're not built to handle that kind of flow. So yeah, initially it was very hard, a huge learning curve. Luckily, my COO, Heather, she was my lead coordinator. So she's fucking smart for these processes and all that stuff. So, I tapped her to run it for me, really, because like I'm not great at transactions, like the paperwork side of it. I'm an idiot like every other wholesaler out there. I just know how to solve problems. But like the setting up of SOPs and all of that stuff, took some time, and it was that's why in the very beginning, we just brought on a couple of people. We didn't really launch it to the public till Ricardo Rosales' event in Miami in October of 21. Because we knew we needed to test it out and try to break it and see where the were. But overall, it worked pretty good, pretty much like we thought it would. But we're 3 years in and we're still figuring stuff out and fixing stuff. Like, new shit happens all the time.
And you guys are growing too, so you're
everything's going to break.
Yeah, we had a meeting today. Hey, some coordination between our TCs and the title company. Hey, something broke. What happened? The 3 of us sit down and figure it out. So there's always that stuff. But I've had people say, I'm going to open one too. I'm like, best of luck. Best of luck. We got about $500,000 to invest in it and 3 years to work out the kinks. Because
what are the best states to work in?
Yeah.
And what are the most difficult states to work in?
Yeah. The worst states. California is not terrible. It's not the best, but like New York.
I like it.
Yeah.
But I don't think California is bad. Like, the deals we've done in other states have been a pain in my ass compared to like California. And
I'm just glad we're not an attorney state. I hear about New York and oh my gosh,
oh my God, bro.
That's what I was going to tell you was, New York, New Jersey, Massachusetts. I'm from Mass, and it's a horror show. Maine. Yeah, any of those attorney states where what is normal is the buyer and seller get their own attorneys. Those,
Yeah.
man, it's a nightmare. We've had some email chains that go over 200 emails because the attorney and the paralegals and the agent, like there's just everybody's involved, and it's just a shit show.
They all want to put their stamp on it, right?
Yeah, the southern states, Tennessee, North Carolina is pretty easy, even though it's an attorney state. Florida's good. Texas is great. Like, once
is it easy to do transactions there?
Pretty easy. There's some stuff you can't do, like you can't do the installment method, you can't do lease option. Well, they've got some owner finance laws there. We have to be super transparent. But yeah, as far as closing the deal, once we were up and licensed, it was good.
They do assignments in Texas.
Yeah, Arizona,
escrow state, right? It's not attorney state.
Yes, yeah. Arizona's the Wild West. You can do whatever you want there. Yeah, okay.
Mm-hmm.
That's pretty much wide open. So yeah, but southern belt states are usually the best. I remember, I wish I could get it quicker, but when I had Investor Lift Up, the thing with all the heat maps, and I had my acquisitions person in there, I literally like drew a line across the Sun Belt, and above it I wrote, "Fuck this. Stay out of all these northern states."
Right? 100%, bro.
Like
Stay
Ohio,
away.
it's a great place to just because a state's good for a landlord doesn't mean it's good for a wholesaler, right? So when you go to Ohio, they want a 2% rent multiplier, right? They want to buy it for 40, rent it for 80, buy it for 80, rent it for 1,600, right? Like that's hard. Same thing with Memphis. Birmingham's a shithole too. But like Memphis, let's talk about that. You go to Memphis and Kent Clothier's company wants to buy something for, 40 grand, put 40 or 50 in it. Now they're in it for 90 and they want to, sell it turnkey for 120. Okay, cool. Great business for them. But as the fucking wholesaler, if I want to make $20,000, I got to buy it from this lady at 20, right? Like the numbers start to get so compressed. So what happens is you can only buy it for 30 or 32 or 34. And you get into these markets where you get very small assignment fees. Right?
Yeah, I've heard about those.
Why not just go to Titusville, Florida, or Palm Bay or West Palm Beach where you can make 60, right? So then it just becomes, where am I allocating my resources? My time is just better spent someplace else.
Are those markets like a Memphis, Tennessee, maybe parts of Ohio? I've heard some other areas that Strat has tested out. Maybe in Illinois, there's Chicago and some of the. Well, Chicago, I'm sure you can get some good deals. I heard it's just more difficult. But are some of those markets like a Memphis, from your perspective, seeing lots of volume, having done deals yourself in this business, would you say it's just the juice just isn't worth the squeeze? Like it's just not worth it for a wholesaling business in a market like that?
Yes, 100%. Now, if I lived in Birmingham, I'd have crushed the competition, right? But I'm there, right? This is the problem with this is, there's two models of wholesaling, local and virtual. So when you're local, you understand street by street and what to do and where to do it, right? Like that's a different model. We're virtual, right? We're popping into some place, we're pulling a list, hoping for the best, and it's not even us like doing the calculation in our head. It's some acquisitions person who hopefully we've trained really well. So yeah, I mean, we invented ways to lose money in St. Louis and Birmingham and some of these little small places. It gets very difficult.
Yeah, I should have asked David about these when I first started because we got a fuck ton in Detroit, bro. So like all these places where everybody talks shit, the biggest thing is too, not only are you dealing with these really small margins, is that there's so many deals. The wholesaler's not important.
So that's it. That was
the wholesaler's not important at all, bro. Like they could go buy one off the MLS and get probably a better deal than no matter any deal that you bring to them, unless you're bringing them free houses.
Right.
Like that's how much deal flow there is in those markets.
Right. That was the point that I forgot. I was running out of gas after your question there, but yeah, it's a supply and demand issue, right? If there's more buyers than supply, we're great, right? Chattanooga's like that. I can put almost anything out there and it will still sell. But if there's more supply than buyers, which is what you see in the northern states, what you see in places like Birmingham, because it's such a dump, man. There's so many dilapidated houses. There's so many tax deed there's just a lot of inventory out there that's really junky. So it's at a very low price. And again, you're not going to make 20,000 because the buyer's like, you're overpricing it. I'm going to go to MLS or I'm going to go someplace else. So yeah, supply and demand, you want to make sure the ratios are, there's more buyers than then in inventory, and then now you're getting into evaluating, like how do you pick a new market to go into. The way that I always used to do it is I knew my market. I knew we have 300,000 people here. Like I always use this as a baseline, right? So Chattanooga, I'll never go anyplace smaller than where I'm at now. So every other city that I go to, and I love those like secondary cities, I'll always run the numbers and compare it up to Chattanooga, right? So if today I was going to go to, I don't know, wherever, pick a city, I don't care. If it's like 300,000 to 500,000, I would go into PropStream just real quick and just pull cash buyers in Chattanooga for the last 90 days. Great. I don't even care what they are. I just want the number. And then I'm going to go to this city. I'm going to do the same thing. I'm going to pull it in Peoria, Illinois for the last 90 days. Do I at least have the same number of cash buyers, right? If populations are the same, right? Because that tells me a lot about absorption, right? How many deals can the buyers in that market take? All right, does that make sense?
It 100% makes sense. David, can I negotiate state judgments? I was talking to Hannah about this the other day.
No.
And I was like, Hannah, can I do anything with these people?
No, you can't. Child support, state judgments, code enforcement, sometimes you can. Sometimes
I know we can negotiate code enforcement if we say we're going to clean it up.
Yes.
Yeah, they'll bring
Property taxes, no chance.
Nope.
Sure.
No chance on property taxes.
No, almost anything dealing with the government, because they don't care. It's just some lady sitting at a desk, or a little metal desk with the 2 drawers, and she doesn't care.
Yeah, she doesn't give a fuck.
No. So those, you're pretty much stuck with those. But that's the seller side, right? I mean, hopefully her sale price will cover that. But I feel bad, but that's not like, that's like having a mortgage, right? Like I can't fix that,
Exactly. Are hedge funds back, bro?
What's that?
Are they back? Are hedge funds back? Are they coming back?
Yeah. We're seeing them start to come back.
I see Vic. I mean, Vic to me is like one of the kings of selling to hedge funds, and he keeps posting about them.
Yeah, they're coming back slow. They never completely went away, but if Amherst was in 100 markets, they probably dropped down to 20. Like they contracted really just to the main markets. But yeah, no, they're definitely starting to come back.
And then I just want to say this: clothesline settlements can suck my balls.
Yes, I agree.
Clothesline settlements
Almost
sucks.
any of
As a nationwide title company.
Yeah, first of all, there's no true nationwide title company. Not even First American that has their own branches is in all 50 states. So nobody's nationwide. I don't give a fuck what they say. They may have some partnerships, but that's still them depending on somebody else. But yeah, I mean, the reason we started our own title company was because I've never found any of them to be worth a shit for more than a couple of months. Even though, and we do a lot of deals. Like they'll say to us, hey, we're going to give you your own team, and it still falls apart.
They never do. Because I think I remember them telling you they were going to give you your own team for a long time. Yeah. And they never could.
Yeah, it's a struggle. Title companies are the worst. And like they pay attention to us. Like we do a lot of deals. I've had the vice president for First American and Fidelity National like in our office, like for the East Coast, because we do a lot of stuff and they still suck for us. So somebody who's doing 1 or 2 deals a month, like
you have no leeway, bro. They tell you to go kick rocks.
Yeah.
David, so you brought up a couple of times the local versus virtual wholesaling model. I'd like to say I have the local model. I just so happen to be virtual the way that I have my business set up and where I geographically live. But I run the local model and I personally love it for many reasons. Yep. Just from the familiarity, the easeability to be quick and make decisions and knowing the area, right? Some of the points you made, the relationships that you build and how those stack. But the argument for nationwide is I'm casting a bigger net. I'm creating more opportunities. I might catch some more low-hanging fruit in multiple different areas. What, from, again, your perspective, not necessarily how you feel about it, but just from what you see from a transaction standpoint, your most successful clients, are most of them running a local model or are most of them running a virtual wholesaling model? And thus that's why they need the transaction coordination from you, because just to to have people in different areas maybe isn't as scalable. So from
Yeah.
your perspective, what are your clients doing that's maybe bringing them success?
Yeah, most of our people are virtual, 100%. I mean, we have some local guys. I have guys in this market who use us for the TC work, because whether you're local or virtual in that sense, somebody still has to do the work, right? Somebody's got to get the death certificates and just do all of the things that our coordinators are going to do. Otherwise, you're going to do it. And if you're doing it, you're definitely not talking to buyers and talking to sellers. You're like the best person to have this conversation with. I use like a football analogy, right? Like we want you out on the field playing, right? Not sitting on the sidelines with a Surface Pro, trying to figure out what the fuck the next play is going to be, right?
Yeah.
We want our acquisition people like actually out there doing the game, right? Doing the thing. So I can tell you for me why we went from a local model. We fucking dominated here in Chattanooga, like for 7, 8, 9 years, like nobody was even close to doing the number of transactions we were doing. And it was me, my wife at the time, and a couple of times I brought in a third partner. So at the time, there was 3 of us, and it was a 30-30, third, whatever the split. And that's okay, but it's a pie. You're whacking up the pie. So if your average, at the time, I think we were like $16,000 or $18,000 on a deal, like we're cutting it up evenly. But then we brought in a 4th partner, right? And now your piece of the pie starts to get a little bit smaller. So for scalability, that's why we had the virtual, right? The guy we brought in, we thought was going to be great. And, I didn't want to make less money. I wanted to do a little bit less work, right? Hopefully this person we were bringing in was going to take some of that burden off. But how do I make more money? Because in any single market, right? We talked a little bit about it before. There's an absorption issue, right? I cannot put out 1 property a day. Can't do it. 5 days a week, it's never going to work, because you know what's going to happen? I'm going to send Stratton a deal on Monday, and he's like, oh, yeah, I think this is good. I'm going to buy this. And then I send out a deal tomorrow, and he's like, oh, fuck that first deal. I want this one, right? So you give your buyers too many options, and you just self-cannibalize, and nothing sells. So there has to be, again, supply and demand. That you have to keep the demand high. And if I'm putting out, 40 properties a month in one city, again, they're not, I'm not going to be able to move them, or I'm not going to be able to move them.
You have no urgency.
Yeah, there's no urgency. I'm not going to make the assignment fees that I wanted. So that was for us why we went, we even started going nationwide, why we even looked at Birmingham, because it was close, and fucking St. Louis, and, some of the other cities and states. So that was the impetus for us for why we went. But to answer your question, you can, if you don't, and scaling is not for everybody. I tell people ask me to come talk about scaling. I'm like, don't fucking do it. Don't do it, because most of you aren't prepared for the cost and the heartache that that's gonna take. You were making a bunch of money running a local model. To go virtual, it's a whole different business, right? You're going to add people, software, processes. You're probably going to make the same money or less money for about a year, right? Until you
100%.
Even with a great coach who's done this before, we didn't have that. Nobody was teaching virtual in 2016, but it's going to take you some time to figure it out. Can you weather that storm before you start to jump up again and stabilize? But you can make a lot of money on the local model, or being virtual and picking one market. Like you said, it's a lot easier. You know all the players, the buyers. You start to have relationships with people. It's a good model. You can make a bunch of money.
My last question, and I just want to throw in a statement. I think the best possible model is a virtual model in up to 8 markets
Max.
That are 350 and above.
Yeah.
That is like
80 markets, and it was brain damage.
If you're in like 8 markets, you can still build relationships, because I see we have no relationships with the buyers, and so it's very standoffish for the first couple transactions, because you don't know who's going to fuck who. Like, you don't know what's going on. There's no trust there, to where if it's out here, I can post it in a Facebook group. I'll have 10 people I know hit me up.
Yeah.
Like, hey, bro, what's going on? This is the number I want. And then someone will be like, sweet. All right. I can wash my hands. I know that they're legit. I don't have to worry about it. And it's over.
Yep. Yeah. That was how we started. Oh, and again, we invented ways to fuck it up even when it was running good. But yeah, like 6 or 8 markets, and you've got a dispo person who handles like 2 markets, right? And they're literally calling those buyers, building those relationships. And that's sort of probably the best blend, unless you're going to go all the way, Nick Perry, I'm going to be in every market in the country. But
Nick still died down. Nick still told me he's like cut off 3/4 of his markets and went
we
down to
did
smaller
the
markets.
same thing. We were in 28, our wholesale company down, and it was all Southeast. Like it was all North Carolina, Florida, couple of the big cities, Macon, Savannah, Atlanta. Yeah, we did the same thing. We contracted, and we see that a lot with our clients. As you know, they start local, they go virtual, then they contract a little bit, and then they get a couple of them. They start to get some money and private money, and they shrink all the way back to one market, and they buy it, close on it, list it, wholesale it, whatever. So that's sort of that ascension model that we see.
Sweet. Dino, did you have any other questions?
That's it for today, man.
I mean, David, thank you so much.
Yeah, man.
And I mean, you were a sponsor at the last Deal Champ Summit.
Yeah,
you said you're already in for the next one, bro.
Yeah.
So we're going to hold you to that. You were an amazing sponsor for us.
Thank you.
I'm so excited to have you again.
Really good event. I told you guys all when I was there. I'm like, first off, I didn't know where the fucking Uber driver was taking me. Like it just, we're like going through these back roads through some
Out into the woods, dude. We're taking you out into the pastures
and then all of a sudden we get
put
there,
one in your forehead.
Hotel and casino. And no, for real, man. I told you I was very impressed. I get to do a lot of events, and you guys did a great job. The venue was awesome. As a vendor, great access to all the people. The stage, everything was set up good. It was really well done.
Thank you.
it,
We
bro.
plan to put it on even bigger and better this year in 2025. It's April 4th and 5th for those that are looking for the next big event that could potentially change your life, right? I mean, going to these events, as you know, David, we've done a lot of different events. It's the people that you meet, it's the information you receive that will help you continue to push forward and get to that next level. So, guys, make sure you guys are keeping your ears out for when we announce it. Tickets go on sale. Deal Champ Summit 2025. It's going to be April 4th and 5th. We look forward to it. David, can't thank you enough for being on today. We always love being around you, talking with you, talking about your business, Easy REI Closings, and all the good work you guys do there.
Where can they find out more of it? Is it Get Easy REI Closings or Try Easy REI?
No, I think you might have a link for it. Okay. That's it. Well, whatever.
Which one's yours, David? What is it? Just Get EasyREIClosings.com?
Mine is just Easy REI Closings, but
EasyREIClosings.com.
yeah. But if you tell us that you came from Stratton, we got some extra special bonuses we can give you.
There we go.
I love it. And then we even have people in the Instagram comments saying that the last one was awesome and
It
they
was.
can't wait for the next one.
Great.
Yep.
All right, guys. Thank you so much for tuning in. Don't forget to hit like and subscribe. We'll talk to you soon.
Peace.